Great day to you. This is Tyson Whitewood reporting, and welcome to this explanation and demonstration on how to fill in your strategic spending plan. It is one of the consequential tools to success in my view, and also that first step for you to take in order to take control of your time, your money, and ultimately your life. So if you see some value in that, then let's get down to business. The first thing you want to do is come to the instructions tab, all the tabs you can find down the bottom, and the instructions tab will basically display all the instructions which you will need to read. So if you ever get stuck, just come back to the instructions and they'll explain on how to continue from where you are. There are three parts to the strategic spending plan. The first part is for business owners, the second part for property owners, third part for PAYG or anyone who is an employee. And how we're going to start is we're actually going to start through the employee part of the strategic spending. So business owners will have to hold on for a short bit. However, they will need to still be listening. The reason being is all business owners will, at the end of the day, in most cases, will have a net income, and all your net income or non-tax deductible items will actually come through the PAYG section of the strategic spending. So let's get started. The first thing you want to do is put in the month. Now, this is not the month that you are currently in. It is the month that you will be in next month. So for example, right now I'm in December, so I'm going to be starting this on January 2012. There you go. My name, so I will just put my name in here. Why is it important for us to put our name into this? Reason being is the name will pop up on each page so that when you fax it through or send it through, we know exactly who the strategic spending belongs to. So let's get started. This is your summary page, or down the bottom it's labeled your net income page. Your summary page will show all of your expenses versus all of your income and will give you the end result on whether you are saving money or in fact overspending. And it's a great realization whether to find out which side of the coin you actually lie, because from either side of the coin we can take some action and really get moving toward our goals. So the first thing is, if you are an employee and have a net income, so your tax is already taken out by your job, you would then place your details in here. So let's say, for example, you make $4,000 per month. Okay. Now I'm going to just drag it right across here. Now, if you don't know how I actually did that, I'll start again, because this is the net income for, it might be yourself or your spouse. And then you can even have your spouse here. So let's just say that this is my income and this is my spouse's income, and her income might be $5,000 a month. Okay. Now, if I put my cursor or my mouse over the bottom right-hand corner, you can see it turns to a cross. When I click down and hold down on the left-hand button of your mouse, if you're using a mouse, then you just hold it down and slowly drag across to the right, and you'll notice bada bing, bada boom, it just all pops in, okay? And just the thing, this isn't a monthly kind of case where it goes month by month. So if you are calculating your income via week, please make sure that you times it by 4.34, because that's how many weeks are actually in a month, okay? And another important thing is understanding how many business months there are actually in the year. Now, most people think that there are 12 business months. However, we're going to be taking into account Labor weekend, Easter, that little trip that you have to shoot home for, or those Christmas holidays that you're taking, or that special anniversary to Hawaii for a week. We're going to take all of that into account and understand that there are 10 business months. When you kind of clean through it all, roughly it's 10 business months, okay, that you'll be working, 2 months off. Now, when looking at that in our strategic spending, we want to be as realistic as possible. So for some people, it might look more like this, where you don't work December, January, and you only have income from February to November. And for other people, it might be different. In this case, I'm going to leave it here because we have 10 months worth of income for 12 months worth of expenses. Now, this is something that we do take into account, okay? Now, as we scroll down, you'll see that there are more incomes here: term interest, stock bonds, tax return, others, and others again. Anything that is highlighted with a light blue background, you can change. So if I wanted to change this into commissions from my income, I would just simply type it in. And there you go, pops in commissions, and I can put in so on and so on and so on. Okay? All right. Now looking at this, this is a 12-month forecast of what we would like to do in the next 12 months. So I'm looking at my income and I'm thinking, wow, my spouse is doing really well. In about May or after a quarter, I would really like to catch up to her. So I might decide, okay, I'll put in $5,000, and then in the next quarter, I'm thinking, oh, well, I think I might like to step it up again and work a bit smarter and make a bit more. So all of this is totally subject to you because it is in light blue, okay? And as you can see down the bottom, all our incomes have been tallied up and we are on 101,000 in total income. Now, when it comes down to here, it says, warning, these figures must be filled in on individual tabs found at the bottom sheet. And when it says warning and it's in red writing, you should follow it. So all of these will slowly be filled in as we go through the tabs. So let's start at the savings tab. The savings tab, as you can see, it has asked us to put in a percentage of monthly income that we'd like to save. And for most of us, it should be 10%. If you're going to be putting tax away as well, we might as well put 20% just to be safe, and then it will automatically calculate 20% of the income from the net income page. Okay, now that's calculated, and as you can see, it has now brought it over to the savings tab automatically. Fantastic. This is how we like it. Your daily expenses page, your personal daily expenses. So these are the expenses that are non-tax deductible. So I'm looking at food. You know, this month I might spend $1,000 on food. Entertainment might be $200. I'm not sure. Though the easiest way to fill this in is to actually go down 1 month and look at clothes. I might spend $50 a month on clothes. Magazine, babysitting, hair and personal care, $50. Okay, actually, nope. I just took into account my spouse's hair, so that's more like $200. Gifts, might be buying presents, etc. And other. Once again, these are things that we can change. And what we're going to do once we finish 1 month is we're going to click and hold down on that left-hand click again, and then we're just going to pull all the way down to the bottom, and then hover the cursor or the mouse over the bottom right-hand corner of one of the cells or boxes, and then we're going to hold down our left click again and then drag across. And there you go. All of a sudden you've done all 12 months worth of expenses. And remember, you can go in individually and change things because you know that, oh, Christmas in July is coming up. I'm running a program, or I've got tons of family coming around. I better bump that up to 2,000. You can do that. Anything in light blue, you can change. So that's your personal daily expenses page. And once again, you can see that it's been brought over and it all is in the summary page. Let's move on to the next tab, which is personal housing and transport expenses. Your mortgage payments. Your mortgage payments might be $2,000 a month. Okay? And then once again, we'll just drag that across. Drag it across. You might have rates which might be paid every quarter, and your rates might be $280. And then what we will do, obviously, is just go across every 3 months so that it makes out that it's a quarter. You might have your telephone, which will include your mobile phone, so that might be $250 a month. Your electricity might be $100 a month. So these are just figures that you will plug in, and I'm going across as quickly as I can. Your car payment. Now, please note that this is your personal car. If it's a business expense or a tax deductible expense, then you would not use this part of the sheet. We will come to that. However, if you have a personal vehicle that you're paying off, you might be paying off $500 a month. Your petrol might be $200 a month. Actually, it might be more like $400 a month. Your car license, so on and so on. And I trust that we're all following along so far. And then there we go. That's automatically calculated. These are non-tax deductible expenses. So this is all personal items. Education and medical expenses. You would just go through this yourself. Whether you have children, they would all come into here. If you've got your life insurance, which might be $120 a month, so on and so on, your doctor, your dentist, you would just fill that in and drag across if need be. The final tab is your personal credit cards and loans. So if you're currently paying off a credit card, you would simply put in how much you owe, or the limit, sorry, what the limit is. So this one might be 7,000, and that tells us exactly which card it might be. This limit might be $10,000, and then we understand which cards, and you might be paying $500 a month off this one and $500 a month on that one. And once again, you do the same for your loans and everything else. Holiday, this is obviously our intention. So for me, it's in January. I am going away on a holiday, and I'm planning to spend $1,000. There you go. I won't need accommodation because I do have a lot of family where I'm going. So let's come back. That's your entire personal page, all your personal items and expenses complete. And as you can see, all of a sudden, all the numbers have transferred across to our summary page, and it shows us down the bottom here what our net position is. Okay, you can see now how the months where I'm not making any income have actually come through and are showing absolute negatives. So let's just say, oh, I've decided to work this month, and my spouse has decided to work that month as well, and then all of a sudden we get numbers that are looking very similar to the previous months before. Okay, fantastic. So there's 16,000 in this case. There's 16,000 above. So we're in the green, which is good. And remember, we have savings of 22,000. Okay, so you're about $38,440 up. That's pretty okay. Now, that is the strategic spending if you are an employee or have a PAYG income. If you're a business owner, we would come to this section here first. So our first step will actually be to come to the business income and expenses page. Now here we are, and we're going to be putting in our gross income. So this is before tax. Okay, this is before tax. Now let's just make it easy numbers that your gross income for your business is $10,000. Yes, $10,000. So you make $120,000 a year. And let's just say that my spouse doesn't actually work for me. She has her own job. However, this is my business. Okay, and in commissions, I actually earn an extra $3,000 through the commissions that I make on other forms of income. So this is my business. I make $156,000 gross per year. Then I come down to my business expenses and I look at my business credit card, which I pay off every month. And my business credit card might be $2,000. My phone bill might be $250. The lease that I pay on my property, might be $3,500. My motor vehicle, so my business motor vehicle, the motor vehicle that I claim all my expenses on, might be $500 a month. Loan repayments, so on and so on. The most important part in here that you would put is tax and also employees. Isn't that interesting? So your employees, you may pay yourself, for example, or you may pay, in this case, with the strategic spending and how it works, you might be paying someone else. And you know that someone else might cost you $2,500 per month. And then your tax, we're going to be putting away 30%. So it might be as simple as you calculating. You will need to calculate, okay, what your actual tax rate is. And I'm just going to go, excuse me. Okay, here we go. All right, so you'll obviously calculate 30% if you're a business. Now let's just be on the safe side and make it easy numbers that we're going to be putting away $3,000 for tax. Okay, and then here we go. We can go all the way down, drag across, bada bing, bada boom, and there we go. And what it's basically showing just to give you the whole overview, is your gross income minus your expenses, your business expenses, gives us a net income into your bank account of $1,250 a year. Now, not the most desirable income, though I know it is true for some businesses. Okay, and this is what it's all about. It's getting in control of your money, time, and ultimately your life. So we need to be real about all the numbers that we do put into the strategic spending. Now let's come back to that net income page. Now remember, that is my business and it's showing my income. So I would actually have 0 at the top here under net income. Okay, so my wife makes $5,000 a month. I, after all my expenses, make $1,250 a month. And this is where the power in the business, personal, and property strategic spending 4.1 comes in, is seeing this. Okay, if you're a property owner, we'll come to the last tab and it looks something like this. Pink for property, pink for property. If I have an investment property, I might be the owner. There's CSJ, it stands for client, spouse, or joint. In this case, I might have 2 joint properties. They both might be 3 bedroom, 2 bathroom. Suburb, I might have them in Robina. Okay. And then once again, even with words, we can drag them across. The current value of this one might be $500,000. Of this one might be $550,000. I might owe $480,000 on this one and $220,000 on this one. And you can see here that the net equity is already been calculated for you. And I might have a redraw facility on this one of $10,000 and this one $100,000. Okay, now this is just to understand where you are and so that we can get a good grasp on where you are as well and also where you want to go so we can help you bridge that gap. My payments on my first investment property might be $2,000 a month. Now remember, this is all catered to your own individual circumstances. This all is an example and I've dragged it across. There you go. Actually, this is your property income. So this is how much you're making. And if we're making $60,000 a year from 2 properties, that's pretty good going. So I'm going to probably make it a little bit more realistic in some cases. I mean, these days, realistics for a lot of people might be just breaking even. So let's just look at this and say, okay, it's making $24,000 a year, and your payments for each property might be $950 in mortgage. Now, this is the mortgage for all your properties, remember. So we're going to have to look at something like $1,900. Okay, you might pay your rates, which might be $600 every half year, something like that. Now, your $1,900 will just drag across. And then once again, it's automatically calculated down the bottom on how much we are actually making. And then if we come back to the summary page, you can see now where we are on a financial basis. Now, this may not be the best example of a profitable transaction, though the biggest thing is actually completing the strategic spending, being honest with yourself and being true with yourself. And from this position, if this was someone's position, then we could actually go ahead and make some changes and know exactly in what area we need to make those changes to make a difference in our lives. So I trust that you enjoy the strategic spending plan as much as I did in filling this in and demonstrating this to you today. If you have any questions, please give us an email, support@onelife.com.au, and we look forward to helping you and serving you and like I said, building a bridge to getting you where you want to go. Enjoy your day.